Good afternoon, ladies and gentlemen. My name is Jim Lee, a first-year full-time MBA student and a panel director for today's panel discussion on investment financing. The panel topic today is trends and effective investment financing strategies of Chinese companies enter the U.S. market. As the U.S. economy continues to expand, it is attracting significant global capital. However, investing and doing business in the U.S. can be complex. Although China and the U.S. has enjoyed long, strong economic ties for numerous years, it hasn't been until the last few years that Chinese investment in the U.S. has increased so rapidly, thanks to the current investment environment in the U.S. and a more supportive policy environment in China. Our distinguished panelists here with us today will discuss the trends of Chinese investment in the U.S. and the various investment strategies of Chinese investors. We are honored to have with us today Rex Hong, the Vice President, China Business Relationship Manager, Cathay Bank. Brian Peck, Deputy Director, International Affairs and Business Development, Office of Governor Edmund G. Brown Jr. And Frank Xu, Managing Director, A&J Capital Investment. And the panel will be moderated by Gregory Carnes. Mr. Carnes is a partner at Cox Castle & Nixon, one of the largest real estate law firms in the country, where he managed the firm's Pacific Rim Group for over 30 years. International investors, lenders, and developers from Greater China and Asia have depended on his broad expertise in real asset acquisition and finance, construction and development, entity structure, and joint venture negotiation. His clients range from large international institutions to more entrepreneurial private companies. Over his career, he has worked on an extensive array of commercial real estate investment, development, and loan transactions. So without further ado, please join me to welcome our moderator and panelists. Thank you.
Well, good afternoon, everybody. As Jim mentioned, my name's Greg Carnes, and I'm a partner at Cox Castle Nicholson, which is a real estate specialty firm. And for the next 40 minutes or so, we hope to amaze you with tales of U.S. market trends and investment strategies of Chinese investors. And to assist in this effort, we have this informed and experienced panel that's going to give us all kinds of valuable insight. So let me give a little deeper introduction of our panelists. First, Rex. Rex, as Jim mentioned, is the first Vice President and China Business Relationship Manager at Cathay Bank, where he oversees China-related policies and initiatives. And Rex works closely with the bank's corporate and high net worth clients. Prior to joining Cathay, Rex launched the Shanghai office of PFG Best, which was a large U.S. futures commission and trading house, right? A brokerage firm. So welcome, Rex.
Thank you.
And then seated next to Rex is Brian Peck. And Brian is the Deputy Director in charge of International Affairs and Business Development for the Governor's Office of Business and Economic Development, GoBiz. And GoBiz is the lead state agency for marketing California in areas of business development, international trade, investment, and economic growth. And prior to his appointment, Brian was an attorney, specializing in international trade. He's an adjunct professor for international trade and intellectual property at the USC Gould School of Law. And Brian was a senior representative in the U.S. Trade Representative's Office and has negotiated intellectual property aspects of numerous free trade agreements. Welcome, Brian.
Thank you.
And then last but not least is Frank Xu. Frank actually began his career as an engineer, so he had a useful job once. And he worked in Michigan analyzing auto safety and performance. But about 5 years ago, Frank got tired of cold winters and moved out here, and he established A&J Capital Investment. It's the U.S. strategic partner for Henry Global out of China, and Henry Global is probably the largest EB5 lender in the U.S. today. And A&J underwrites and structures and invests and manages investments for itself and for its clients. They've underwritten more than $1 billion in EB5 investments across the country. Some of A&J's higher profile EB5 deals include the Hollywood Park project, just down the street, and the SLS, the new SLS hotel in Las Vegas,
Right.
built with EB5 money. So, with this, let's start right away. I think before we can talk about trends, let's just talk about Chinese investment in the U.S. And let's start with Rex, but it's really a question I'll ask the whole panel. What sorts of assets are Chinese investors investing in here?
Well, I think since 2013, the foreign direct investment into U.S. from China has exceeded U.S. foreign direct investment into China. And also the same year, the real estate has been the single largest investment sector for Chinese investors. And also Chinese investor has been the #1 investor, exceed Canada and Mexico be the #1 investor in U.S. real estate market. And I think yesterday when I did a little research about the amount, how much they invested in U.S. real estate, it's about $22 billion. That's a number from U.S. Realtor Association. So, but besides the real estate, at the first panel, William and Adam has introduced, actually the investment in the U.S. is very diversified, from food, agriculture to high tech, clean energy. So very diversified.
And why do you think, Brian, that Chinese investors are so interested in investing in the U.S.?
I think, one, you have the rule of law. You have stability and certainty. Certainly for the U.S., but particularly in the case of California, you have a highly educated workforce. In California, you have the leading sectors of manufacturing, biotech, high tech, agriculture, entertainment, the previous panel talked about, all high growth areas. And they provide a stable, certain investment, if you will.
Frank, what do you think makes the U.S. attractive for Chinese investors?
The first regulation, transparency, and also predictability. Actually, I would like to share some experience when I get into the business. And a few years ago, actually, when I worked in Michigan, in auto industry as an engineer, we outsourced a lot of work to China. And for internally, we have some statistical numbers. And during that time, we found out that about 80% of companies that invest in China and couldn't make money. On the other side, the same thing. When Chinese investors investing into USA, it's pretty much the same 80% of the investors and couldn't make money either. So people are the same, and the goal also same. The goal to make money, make good investment. But however, the results are pretty much the same. But also, I found out the richest person in Hong Kong, Li Jiacheng, when he invests in China, he has 95% of successful rate. So he only has 5% of failure rate. So we found out the reason why he could achieve that other people couldn't. So internally, when we start the investment, we have the discussion for EB5, for actual Canadian immigration program and U.S. program. We developed very similar approach. So we make the investment in USA. So we increased our first year in 2010. We released about $100 million. Right now we are under over $2 billion already from our side. All together, we put about over $10 billion investment in about 5 years.
10 billion?
Yeah, 10 billion. And right now we are under at least $500 million a year. So we will not have a good resource to support that.
So you started in 2010, and you're up to $10 billion invested.
We raised $2 billion from our side, and from our partner altogether over $10 billion.
Altogether, 10.
Yeah. So
Wow.
that's big challenge.
So Rex, you deal with a lot of Chinese high net worth clients and corporate clients. What attracts them to the U.S.?
This is a very interesting question because I always ask, why you're coming here. I think the first reason they explain is to diversify their assets. So this is very understandable when a lot of developer firms coming from China, when their return is exceed at least 20%, but return here on relative is very more reasonable and lower. We're like, why don't you still stay in China? It makes more reasonable for the return wise. But they said, no, we are diversified our risk right now. So this is our portfolio. So number one reason is diversify their risk. The second, when I was talking to a lot of high net worth family or individual, they are more seeking to bring the kids to US to get the best education in the world. Think about, world top 10 university, maybe 8 are located in US. So the education, the second reason. Third reason I can see is planning for the future potential immigrant. So that's how Franklin can see a lot of EB5 money influx into US. So these are probably top reasons I can see those investors coming.
If I could add to that, maybe?
Sure.
From the state's perspective, what we're seeing here in California, I think another reason for investment in certain sectors is a response to what is going on in China in terms of its economic growth and needs. We're seeing a lot more interest, for example, now in food processing and agriculture. Food safety is an issue in China. And now, the recent attention being placed on the need to clean the environment. We're seeing a lot more investment now, renewable energy, clean technology companies.
And also in Los Angeles weather,
Yeah, can't beat the weather. Well, yes, someone told me China is at the same time the world's biggest polluter and the world's most conscientious environmental country. So, I mean, there's size means everything when it comes to the environment, I guess. Well, we touched on EB5. Frank, Rex brought it up. Can you take a moment and just give a brief explanation as to how the EB5 program works?
For EB5, it's a special need to meet the financial capital. It's no different from the bank. So a Catholic bank and US bank, we are partners, also we're competitors.
Right.
We both provide financing to some good projects.
But a little different for you. I mean, you're lending money on projects that create jobs.
Right. The difference is like Catholic bank or all the banks under regulation are federal FDIC, and but we are under regulation of like Homeland Security and the USCIS, and plus SEC as well.
Department of Immigration.
Yeah.
So,
But for the investment criteria is more or less similar.
so except for your funds, you have to have 10 jobs for $500,000 invested.
Correct.
Right. So how much did you invest in the Hollywood Park project?
That we put $188 million.
So almost $190 million. So my math is not that good, but that's 4,000 jobs? 40,000 jobs? 375,000 jobs.
So in California, we have invested a few projects. One is Burnham Park. We put $120 million into that project. And we have one project in Koreatown, one in Pasadena. And also we work on Greenland. We raised $200 million for that project.
And the reason that investors want to go through this program is because they can get a green card.
Right, and as we said before, a lot of Chinese want to get rich or so they enjoy different life. Then come to USA, but they want a residence. So, and they first invest $500,000 and create 10 jobs, and once you quit a job and you can get green cards, you can put additional capital or into USA for investment and hope for a better life.
That's a good thing. So now, and this is a federal program, Department of Immigration. Brian, does the state of California, what kind of policies or incentives can the state or does the state put together to try and attract this investment?
Sure. Thank you for asking the question. The basic policy for California is to attract foreign direct investment that will create jobs and economic development. And in fact, Governor Brown created our office specifically for that purpose to help utilize international investment and trade to help spur economic growth. With that, he's implemented several new incentives in the form of tax incentives, tax credits, also sales tax exemptions, R&D grants, employment training, reimbursements. We also have a role in the EB5 process. It is a federal program, but the state is responsible for certifying what are called targeted employment areas, which qualify for that site to be, to be eligible for the EB5 investment. So we certify and designate those areas.
Oh, that's terrific. Okay. Well, let's talk about the trends. 5 or 6 years ago, if I were working with a Chinese investor, they wanted to buy, maybe it was a pretty stable hotel or office building. They didn't want to take a lot of risk. They certainly didn't want to get into development or entitlement. Today, it's a much different world, at least in my world, in the real estate world. So, Rex, I mean, how have you seen the evolution of the trends of Chinese investment?
Well, hotel, of course, has been one of the hottest investment property. It's very interesting because when I look into why this could be such a hot investment compared with office building or shopping mall plazas, one of the investors told me, did you notice how many people are traveling to US in 2013? 1.8 million. And then last year, 2014, was grow about 20% to 2.2 million. And if you use the 2.2 million divided by 1.4 billion Chinese population, that's less than 0.2%. So the growth potential are huge. I think that's also part of the reasons people seeking the tourism, the business gonna grow. And also last year, if you guys remember, last November, Chinese government and the US government has agreed to give each country's citizen 10 years multiple entry visa.
Yeah.
So that will be dramatic impact or attract more tourists to come into US.
And in turn, more investment.
Sure, yeah, definitely, yeah.
Well, in terms of how investments are made, again, outright investment, people can buy an asset, people can acquire a company through a merger or acquisition or a stock purchase. People could decide to do something with a partner. And we see all those different methods. Why don't we talk about some of the pros and cons? So Frank, if you're a Chinese investor and you're looking here at an asset you want to acquire, you could acquire it and own it, or you could be partners with the current owner and work on that project together. What's your preference?
My preference, from USA, we have like a standard, some like a practice, and we can follow the laws, and we understand the need from each side. And we can be partner, or be control partner, or silent partner. We can work out that. But when you deal with the Chinese investor, most of them want control rights, control partner. So sometimes okay, sometimes it's difficult. But if I would like to invest, I'm open for.
So you're open for, you can work with any kind of structure,
right.
but mainland Chinese generally want to own it or control it.
Right. But key is that you have to work out the document. That's what we need lawyers help. Making sure all your contract agreements are in viable commercial transaction or in good shape.
How about, Rex, how about some of the clients you work with? I mean, they're coming here, they're talking to you about their investments and their objectives. They're asking you to finance it, probably. So what kind of advice can you give them in terms of these sort of structuring issues, whether they should be owners or partners, acquire companies or assets?
Sure, yeah. Well, commercial bank is probably the most highly regulated industry or business in the United States. So when a new investor come into US, the first challenge is we're asking, what's your credit score? give us 3 years tax return form so we can see your financial statements, evaluate how much money you can borrow. So the challenge to those Chinese investors is,
To give you the details.
Right, so everything everything is very new to them. So, but the difference is, well, you guys already heard a lot about Cathay Bank, but one of the advantages I think I want to emphasize is because the Cathay Bank was originally founded by Chinese Americans, so a lot of our team are with very strong bilingual and the cultural background. So we have a lot of time to look into your assets in China or your business running globally instead of your credit score here in US only. So that's we can look into their detailed case instead of hang out like this is guideline. If you can fit in, maybe 3 years later, we'll talk later. So that's how the flexibility we work with our customer. There's a very good example actually. UK, Linda Bai is actually at another concurrent panel right now talking about pharmaceutical. That's one of the largest pharmaceutical company from Beijing. We help them finance at the acquisition of a local pharmaceutical facility. So the advice is come to US, hire local professionals, lawyers, CPAs, find a good banker that can really have the willing to work with you and have some maybe government support as well. Yeah.
Well, I mean, I think that there are some pros and cons in that. I mean, as you say, Rex, a lot of industry here, my industry, real estate, is a very local business. Even people who have expertise in real estate in San Francisco would have a hard time in Los Angeles, just not having the same sets of contacts that we have. So I think that it's true. I guess if you buy something, you can always hire the expertise you need. If you have a partner, then you are relying on that person for the expertise. I think, so I guess the question is maybe for my panel, let me start with you, Brian, and it's similar to the last one I asked. So for the mainland Chinese, is it easier to hire or partner with talent?
Local talent, you mean?
Yeah.
Yes. Well, I think, again, from the state's perspective, and our policy is we want investment that creates or at least maintains jobs locally. And so we encourage companies on a couple of reasons. One is, again, based on that policy, but more importantly, for a lot of these companies, they're new to the U.S. market or new to California, and they don't have necessarily the expertise to understand the local market, whether it's a consumer-based company or to know the lay of the land in terms of complying with environmental regulations. I mean, California, for better or for worse, has a lot of regulatory compliance requirements. And so it takes local expertise, whether it's the service providers such as lawyers or the financial advisors, to be able to work through that and to help prevent some of the mistakes that could be made. We've seen some very large Chinese companies come here and not kind of dive in head first, if you will, and then end up having some issues or challenges in terms of some of the requirements of doing business here. And one of the things that our office has learned in doing that is we help companies now do that, understand what are the legal requirements. We help things with site selection, license and permit assistance in terms of streamlining the process or identifying what is necessary. So we've also learned from that process as well the importance of local expertise.
And do people take advantage of that?
They're starting to. I mean, it's a relatively new program, but all these services the state provides for free. So,
let me ask Rex. It seems to me more and more U.S. banks, Cathay Bank, East West Bank, they are less driven by traditional banking, so they're less looking at their interest income, and they're more driven by services and fees, wealth management, other things that they're more fee driven. On the other hand, we're seeing some of the Chinese agency banks coming, and they seem like they're just here to lend. And I'm wondering, is there a role for the Chinese banks? Will they try and move into the the service business, or is their role to pick up the lending that you guys banks are less interested in these days?
Well, every bank has its own mission, or you define yourself who is your customer you want to focus on. So for us as Cathay Bank is a very local bank. So we have a broader network that can help us to access local market to provide retail products. But for the Asian bank, the new Chinese bank coming from China to here, more focus on extend their service to their existing customer in China when they come enter into the US. So there's a couple differences. For example, in the construction loan, as you mentioned, the real estate is very local. So for those large constructions, usually those Asian bank lacks the expertise, local construction managing or commercial real estate management team to underwrite the loan or to manage after the loan was start funding. So this is opportunity. Sometimes it's a lot of opportunities. So we working together with Asian banks as participation programs for those large projects. So there's cooperation. I don't see there's, of course, every industry has competition, but I see more cooperation ongoing. Because early this mid-conference that people are talking about, there's a lot of people compare with Chinese investor and the Japanese or Korean investor. From my perspective, I see even compare about 30 years ago, the immigrants from Hong Kong or Taiwan, well, I see the difference is this wave of change, the investment coming from China are always large. When you're looking at the investment in Los Angeles, Greenland, ocean-wide, this is like over billion projects. So large projects always need more banks cooperation to help the involvement, to help them achieve their objective. So yes, we are more trying to have fee income, but I think every bank does too. Yeah.
So so you see it as more of a cooperative effort.
I think so. Yeah, we have a couple projects going, even with a Chinese bank without the office or branch in U.S. But we're willing to work together. And on the other side, the Chinese banks has a lot of encouragement coming from government to encourage their financing Chinese corporations to oversee projects. But as I said, since you don't have a local branch, it's hard to manage after funding. So it's good to have a local partner to help the projects.
Yeah, that's a good point. I know that some of the Chinese investment groups we work with, I know they probably have a lot of capacity in China, but they have a hard time or just a reluctance to want to guarantee financing here, to want to be involved in that process. And so having a local partner who can take care of that for them is often helpful as well. Well, Frank, you had mentioned that sometimes you're a competitor with Rex and Andrew at East West Bank. But Rex seems like he's a cooperative guy. He doesn't want to compete, he wants to cooperate. So are there ever ways that you with your EB5 financing and Rex or Andrew with their traditional financing, are you able to collaborate ever?
Oh yes, so we have worked together for many years. And the major difference for EB5 is not like a bank of finance. Bank of finance, you write the agreements and for example, loan agreement. When you write the loan, you have the money right now. But you see as the EB5 program is subject to US CSA approval, and it's a federal program. So you write the loan, you have to wait until the approval, you can disperse the money. There's always a like for that. So bank will say, as long as you doing this, I will give you the money. But we said we have feel comfortable, but the bank says not enough. Huh. So, but now we work together. They understand the project. We actually work very well.
I have to tell a quick story. I was almost 2 years ago, was at a meeting with a Chinese investment group, and they were looking at a site downtown that the developer wanted to build like a big 500-some room Hilton hotel. Yeah. And there was and so they called the investor and the developer and the property owner and all their attorneys, all these people in this big room, and one of your partners, Ming, was there, and it became pretty clear to me that my client, the investor, wasn't going to do this deal. But at one point, Ming, your partner, said, we will finance 72% of the total project cost of this project on a non-recourse, non-guaranteed basis. All the costs, all the construction, everything, no guarantees. And afterwards, I remember going up to him and saying, I don't think my guy's going to do this deal, but I know a lot of people who will take that loan. So, I think there's probably a role for both of you there.
But the important thing is approved or not.
That is the important thing, especially these days in banking. Well, let me ask a question. I mean, the market has certainly heated up since those initial Greenland buys, and it's probably gotten, not probably, it's a lot more competitive, a lot more difficult to find a good deal. Are you worried that Chinese investors may look elsewhere, may decide, hey, Europe seems more dysfunctional than the U.S. now, let's go to Europe and pick up some bargains? Or do you think that the attraction of the United States and maybe of California in particular will keep the Chinese investment crowd here?
Actually, let me share some experience. Last year, we discussed with some Chinese investors. My first thing is I found two things. First one, a lot of Chinese people feel poor. Well, you do, it surprised me, it surprised everybody. And because in China, the house price used to keep going up. Same as the stock market, if everything goes up, you feel rich. So you can use that as an ATM machine. So you can, once house price start going up, so you feel, well, you feel a little nervous, or so they don't have enough cash flow. They have enough assets, but they don't have enough cash flow. And that's number one. The second one is Chinese banks. It's hard to find a good buyer, the borrower. They cannot make the money, so they want to loan the money somewhere else, like especially like some USA. That's I found two biggest things. And we last year in September, July, August, sometime like the huge demand for to invest in the U.S. stock market. I found out. But later on, Chinese stock market started to pick up in late last year. And a lot of companies desperate want to get into USA for investment. So actually, internally, we think there'll be not a bad deal down the road. So right now we are starting the bankruptcy code, but not you don't want to hear that. I think so. We're starting the bankruptcy code, and I think that about down 3 to 5 years, then there will be a lot of restructuring deals.
Wow.
And because I just think some Chinese investors overpay the price, and when we look at that financial forecast of pro forma, so nobody can make money. But anyway, the deal, so these opportunities. But better for I know. Yeah.
What about, well, on the list of reasons that the Chinese are investing here, schools and immigration and all kinds of things. I mean, making money wasn't at the top of that list, I didn't hear. So, Brian, what can you add?
Sure.
I mean, does the state worry about, I mean, I was born here, so I love this state, but affordability, it can be difficult.
Sure.
What does the state see some risk that Chinese investors, as they get more comfortable, we're the gateway, but once they get more comfortable, maybe they'll go take a look at Arizona or somewhere else?
Sure, no, the state's definitely recognized. I think for a long time the state was guilty of kind of resting on its laurels. We're California, we don't need to do anything. And we realize that world has changed. So California has become a much more proactive in trying to make sure that it can remain as an attractive destination for direct investment. You mentioned real estate, and real estate is still a huge chunk of investment. I mean, last year, out of the $2.7 billion investment value of Chinese investors here in California, 1.25 of that was real estate.
Wow.
But we're starting to see movements into other areas, and I think that's where California again has its strength. Going back to what we mentioned a little bit earlier, where we were seeing the Chinese now investing in areas such as food processing, agriculture, renewable energies, clean tech, entertainment. There's a voracious appetite for entertainment content, for all the online streaming and
do you think that the reasons for those kind of investments, I mean, real estate, you can't take it back to China, but these kind of expertise and technology, you can export or
That's right.
import depending upon
That's right.
where. So
It's either
you think
to,
that's a reason?
again, re-export back to China or to gain the technology, the know-how, so they can bolster their domestic, strengths in this area. So
right.
we feel that, with that's a potential area for growth. And in addition, we're going to try to be aggressive, again, in tax incentives, other financial incentives, and state assistance.
So Rex, if this were a baseball game, the Chinese wave of investment, what inning would you say we're in?
For California or for United States?
Well, for both. That's fair.
I would say, let's see, first base. So
Oh.
whenever the catcher in the middle catch the ball, we want to make sure we get the ball and make sure we get all the investment coming from China. That actually reminds me, last November during the APEC meeting, Chinese President Xi Jinping said at the opening remark, in the next 10 years or 5 years, Chinese overseas offshore investment will go up to 1.25 trillion US dollar. So that number compared with the current number we are talking about, for example, 14 billion in 2013, that's still a very small portion. We make sure those money are coming to US instead of Europe.
Brian's ready to catch that $1 trillion ball. Well, so let me ask, maybe you know the answer, Rex. Someone was telling me that they felt a lot of the Chinese in overseas investment, and you alluded to it, is driven by the fact that Chinese still are tremendous savers, that the savings rate in China, they told me, approaches 40%. Those of us who live in the US have a hard time believing anyone can save that much money. But I mean, even if it's close, then the banks have to deploy that money. And do you think that it's just the Chinese economy not being a consumer-driven economy yet that continues this flow of investment out of China? What do you think, Brian?
You talked about the savings rate, but I think, again, going back to what we were saying a little bit earlier, I think what the U.S. and California provides is a sense of stability or security that makes it attractive to kind of let go of some of that money. Because I think what I understand in the Chinese economy is that there's a concern about the long-term stability or the ability to maintain those savings, and they're realizing they can use that for a more safe investment in the States or California, and also again for some of the other methodologies, whether it's investing here so they can send their children to school here, take advantage of the education, getting the visa. And so I think there are higher levels of return than just saving it. I think that will continue to be an incentive to invest here.
I want to just add on something. Regarding the saving rate of Chinese, Chinese in China, I think the long term, the rate will decrease. One of the reasons, as Brian mentioned, the worry about the long term stability, and also when the China's financial market was more getting stronger, people have medical insurance, retirement pension, then people will really open up their box to spend money to buy more consumer products, instead of saving for future.
Yeah, and there's a government incentive in China to make it a more consumer-based society.
Sure. Yeah.
We saw the same thing happen in Japan years ago. Years ago, they used to talk about the Japanese, rate of savings, and that's changed over the years as their economy has changed.
Well, so final question. If I were a Chinese investor and I were coming to the U.S. to invest in some assets here, what's the best advice that you could give to me? Let me ask you, Frank. You're a good guy. Know me.
Talk to you and me.
Yeah, talk to me, right.
And should be very selective. And if I want to invest in U.S. right now, I'm looking for the exit in about 3 years. And it's not something I think we need to think about the Federal Reserve. Right now, Federal Reserve has a huge asset, and Federal Reserve has to unload. So when Federal Reserve try to sell these assets, I don't know what's going to happen. The liquidity may be dry up. We don't know how much we affect. It's like how much, $7 or $8 trillion, and the Federal Reserve was.
Do you think that'll keep interest rates low here, or do you
I think the money will not be available at that time. You talk about you have to sell trillions of dollars asset, so the money will be dried up, I think, from the market. So for investment, you have to think about that. About that. So interest rate may go up. We don't know. Yeah.
So Brian, so what can you've got launched all kinds of programs to help me, but what can you give? What advice can you give my throw my way?
Well, that California is open for business, and that the state is here to help. I think a lot of people have misperceptions about California as being a very difficult place to do business, the regulatory, the taxes, cost of living. But if you look at the benefits that California can offer, again, the leading sectors in so many of the key areas of growth, the highly educated workforce, the weather, the lifestyle, the intangibles, altogether I think way outweigh the demerits that you can have. And the thing is that the state government, again, is open its doors to help in any way that it can.
Well, the weather is very tangible, by the way. And someone showed me a chart of all the different states and all their taxes, not just their income tax, but their business taxes, and lined them all up. And California was probably number 14. Right at the next lowest state was Iowa. And I thought, I like California. I'll live here instead of Iowa, so it's worth it. So Rex, what would you advise me?
Same, talk to us and take the easy open account and put the money in first. Take some time to think through what's your investment goal, what you're expecting for the return, and then talk to us again. We'll help you structure the right solution.
You know, the talk to us all seems like it's a business pitch, but in reality, I think, you know, and I've worked for a long time with Chinese clients coming here, and you know, if I were going to China, I would need everything. I'd need all kinds of advice. I'd be calling everybody I could call to find out everything I needed to find out, because I wouldn't know how to do anything. And every investor in China would be laughing at me, thinking, "Oh, we're gonna hand this guy's behind to him." But so it's no different here. I mean, a lot of business here is very local. And I think what I see now, as the market gets more competitive, as prices move up and deals get harder to do, you know, having people having the experience of a good banker or someone in the state who can steer you to the right agency and streamline the process for you, somebody who can provide you with non-competitive financing and great investment advice can really be helpful. And as the market perks up, the people who take advantage of that, I think, will do best. Well, that concludes our panel today. I don't know if anyone's left much time for questions. If anyone has any questions, please ask them. Yes?
My question is to Frank. What's the future development of EB5 program? You know, on one side, you know, all the speakers talking about the demand there in China, because Chinese people, because of this and that reason, they're coming here to the United States for the different lifestyle. And also, we have a lot of students here. Now the H-1B visa, it's getting very, you know, the chance is getting very small. You know, we're talking about the lottery success rate maybe this year is about 30%, something like that. On the other side, you know, the 10,000 visa quota there for EB5, and also talking about the biggest concern is the diversity. Because now the majority of the EB5 visa issued to Chinese investors. So with this kind of a situation, what's your opinion about the future of EB5 program?
First on H-1B, I agree with the successful rate. Last year we applied a few H-1Bs from my company, and we only got 30% approval.
So right there, 30%.
So this year, I don't know, probably we applied 6 or 7 H-1B application. I don't know what's the percentage. Looks like maybe 30% also.
Get 2 approved.
Anyway, regarding to EB5, the demand in China is still strong because 10,000 5 minutes can do 1.3 or 1.5 billion people in China. It's very small.
So 10,000 is not hard.
Yeah, it's very, but Chinese people getting more and more educated and smarter now than before. There are also more and more details, and for the projects of the programs. So we need to train the salesperson more and more and be more knowledgeable and better also understand the USA market and business practice. On the quotas, actually, EB5 program got strong support from both parties. And the capital market is like $500,000 for each investor. So if so it comes with the capital is like about $2 billion each year. And last year, Senate passed the bill to Congress actually. They support to first of all increase the investment amount. We don't know how much, maybe 750, maybe 800, maybe 1 million. So it's a question mark. Another one, they want back to remove back to the visa. The visa will be back to the original. The original pool was 10,000 investors, and not include the family members, because a couple years ago, they never reached that quota, so it's not a problem. But last year was the first year reached 10,000 threshold.
And that's because the way they count the 10,000, it's not just the applicants, it's all the family members too?
Yeah, when it was approved, it states 10,000 investors. So then I was back to the original, so they exclude the family members. So that means will be 30,000, something like that. So that way will significantly increase the EB5 capital amount. So that will be, I don't know, quite close to $10 billion a year now. It will be much bigger than before.
Well, if it has the support of both parties, then I'd say the future is good, because very little has the support of both parties in this country. Any other questions? Yes.
So, and Cassie Bank always have this kind of, you can investigate the Chinese background and their credit and to issue loans. So I want to know how your bank compete with East-West and also HSBC. And or since you are really a corporate guy, so or you guys just a corporate together, say 400% down payment and 3% interest rate fixed, or you guys will have like a price war?
They don't compete, they cooperate, I heard.
Friendly competitors. Well, the difference depends if you're actually really asking the core of our business. So it depends on certain period of time banking strategy. We want to have a more higher volume of this type of loan, so we'll lower the loan to value percentage to justify the whole portfolio. But when you look into the market today, you say, hey, I'm looking to buy a property in next 30 days. And you take advantage or compare with East West and Cathay or HSBC, whichever has the best rate for